The NHS is not going to exist by the time we're 67, 68.
Even more reason, and this is a serious comment, to stack your NHS pension right now, because I think what you just said there, unfortunately, could be true.
I find Bitcoin boring.
Not volatile enough.
Like sometimes things move in the 6 digits, and I just look at it and go, okay.
Hard disagree.
Yeah, I knew you would. I just think pensions in general are just the biggest con ever.
I have never been into a shop and they said, do you want to pay for that in Bitcoin?
As soon as I can get out of the rat race, and that's how I see the NHS pension. The NHS pension is based on me working in the NHS, which is a shackle which I want to get out of. Then the sooner I can get out of that rat race, the better.
It's my pleasure to welcome back to the MedxMoney podcast, Dr. Abdullah Albeyatti, doctor, entrepreneur, and Bitcoin, are we saying fanatic, enthusiast? Where do you see yourself on the enthusiasm scale?
Yeah, I think right at the end of the scale, they're called a maximalist.
Is that beyond enthusiast?
Yeah, it's just on a satanic level.
Well, if you listen to any of our previous podcasts, you'll know that I'm the other end of the Bitcoin scale. But I thought it would be good to do an update because I think, and you're going to correct me here because we've both just done the numbers, I think this is the third time we've talked about Bitcoin on the podcast. And I actually made a note of the prices that Bitcoin was.
This is the fourth time we talk about Bitcoin.
Ah, really? I've missed one. So I think the first time was in 14th of September 2021 when Bitcoin was $45,000. You got that?
So I've got you down at October 24th, 2020.
Oh, we did one before that. Okay, yeah. What was the price before that?
So we're talking in dollars. October the 24th, 2020, first time we did a podcast together, it was $12,800.
Ouch, I'm not enjoying that.
Yeah, then we had a chat again in September 14th, 2021. And it was 44,700.
Yeah.
Then I'll just put in the kind of caveat here. There was a financial crash, COVID, blah, blah, blah. October 18th, 2022, it went down to $19,000. And then today, I mean, do you want to tell me what it is today, Tommy? I can't find it.
You can't find it because you're too busy counting your Lamborghinis and Bitcoins. I've got it about 62,890. Although by the time this goes out, who knows where it will be. And I guess what we should talk about first is we're going to talk about, again, why I don't hold Bitcoin and you do. But let's say, why has, since we last spoke, the Bitcoin price has tripled? So why?
Well, I think because it came down low in the first place. So it tripled from a low number up is the first thing I'd say. People would argue, but that shows its volatility. And I would counter argue immediately and say, but that's because all financial markets crashed. You know, the price of Apple stocks, Tesla stocks, everything really dropped off during that period of time. So people are humans at the end of the day. They're not robots, or they're not as maximalist as I am, which means I've got complete faith in the system. And they will struggle financially. They think, I need to move my assets from one to the other. They start selling off their Bitcoin because they see that as a high risk asset. And that's why the price would start to come down. When you find yourself in better times and the financial market is picking up again, you can be a bit more carefree, which is, I wouldn't say is what I am, but you can be a bit more relaxed about buying up cryptocurrencies such as Bitcoin and storing value in that asset. I've always said in all of the podcasts we've ever done from 2020, so it's been 4 years we've been chatting about this subject, and I've always said just put something away which you're happy to lose. Don't look at it again. Don't check the price every day. You're not using that fund to pay for your kids' private schools or something really important in the future, is depending on it. Because if you just put a little bit in 2020 or before 2020, you'd be very, very happy today. And still, I'll tell you not to sell it today.
Yeah, and I think that's really important, with the caveat that, of course, this is not financial advice, but that's a really sensible strategy. You're not all in on Bitcoin, but as you say, don't put in more than you can afford to lose, which is kind of a good philosophy to follow in any investing, really, but especially one as volatile as Bitcoin. Okay, so the price has gone up possibly because asset prices in general have recovered. In the past, we've talked about the logistics of buying Bitcoin, which was a little bit tricky, especially to non-experts. But now, if you're in America, you can buy Bitcoin via an exchange traded fund or an ETF. So Fidelity, BlackRock, Invesco, they've all got a Bitcoin ETF, which, as far as I understand, tracks the spot price of Bitcoin. So do you think that's had any impact on the market? And what's your thoughts on that in general? Because that, to me, as a non-expert, seems a massive change. Suddenly, normal investors can buy Bitcoin via an ETF. Presumably, they can hold it in tax-efficient investments in the States. Not available in the UK yet, but what do you think?
Yeah, I think it's a massive bonus. And again, I think, if you go through my podcast, I always told you this would be a predictable, inevitable step. The reason because that it was going to be inevitable, it's just too large to ignore. There's just too many funds being used in cryptocurrency, especially Bitcoin, if we stick with the subject of Bitcoin, which is safe. The banks and the Federal Reserves and the governments would have to start interacting with this currency because it's just too large to ignore. The ETF side of things, I think there's a statistic I heard, either it's the largest ETF now or it's the largest growing ETF is BlackRock. And that's crypto and not crypto. Like, it's massive, the takeoff that we've had here. The other things as well which are coming up is something called the halving, which is like a satanic ritual we do in Bitcoin, and that's coming up predictably. So we're recording today on the 16th of April. The prediction is the 20th of April this halving will come about.
Just for the uninitiated, tell us about the halving, because essentially it's a way of restricting supply. Is that right?
Yeah, so if we go all the way back to the beginning, so if we go back to 2018, there was an unknown, mysterious person called Satoshi Nakamoto, who is a he, she, or they, nobody knows. And they wrote a white paper which said, this is a peer-to-peer electronic cash system. So if I explain what that is, if me and Tommy are in the same room, I have a £10 note, I give Tommy the £10 note, my debt is paid, and he can take the £10 notes and do with it what he wants. That was peer-to-peer. There was no middleman interaction. It was just direct from me to him. Now, how can you do that transaction if we're not in the same room? It's very tricky. We could send the money in the post, but then we're trusting the postal service to get it there. And with everything happening with the post office, I don't think that's a good idea. Or you could try to send it via a bank transfer or PayPal or Western Union, which take massive fees. You're trusting them again to take the money. They take days for the funds to get there. And if any of you have been involved in large transactions, such as buying a house, you can tell finally, you kind of have this matrix moment where you wake up and you realize your money is not really controlled by you, where the bank and the lawyers tell us, prove your funds, we don't trust your money, we don't want your money, you can only take out 20 grand a day, or we're going to charge you if you take out more than 20 grand a day for those transactions of you moving your money. So the idea of Bitcoin in very simple terms was a peer-to-peer cash electronic system. So the idea is, how do we do this digitally and get rid of the middleman? To do that, they introduced a network, which is the blockchain network. And the idea is that there are miners, so these are people with computers, that are mining away, keeping this network intact, keeping it in good condition, and helping to block all these kind of Bitcoin transactions in one block, put them together in one block and call that a Bitcoin block. Every 210 blocks that are mined, there is a halving which takes place, and the halving essentially relates to what is the reward the miner gets for interacting with the network and keeping its maintenance. So back in the beginning, every time you put a block on the network as a miner, you got 50 Bitcoin rewards. So if we said Bitcoin today is worth $60,000, you got 50 times $60,000 reward, if that's what the value of Bitcoin was back then. Obviously it wasn't. But from 50 Bitcoin, 4 years pass, or at least 210,000 blocks are added at a rate of around 10 minutes a block, which is about 4 years. So from 50 Bitcoin rewards, it went down to 25 Bitcoin rewards, went down to 12.5 Bitcoin rewards, went down to 6.25 Bitcoin rewards. And the halving, which always seems to coincide with US presidential year and leap year for some reason, I don't know if it was set up on purpose like that, we are going to halve again, predictably, in the next few days or next few weeks at 3.125 Bitcoin reward per block that these miners are adding. When you've got a finite resource such as Bitcoin, so it's already been set at 21 million Bitcoins in total, it will not cross that. And we've mined about 19 million so far. It gets harder and harder to get those final blocks out. And that's why the value of Bitcoin goes higher and higher, because rather than using computers and everything and weeks to just get this block out, I can just go and buy it from you directly. And then that's where the price goes up, because now I have a valuable asset. People would rather just buy it from me than waiting for another block to be mined.
So does that mean that it costs $62,000 right now to mine one Bitcoin, or is it not as linear relationship as that between mining and presumably there's a little profit margin for the miners on there, or is it not linear like that?
There's certainly a profit margin. It's not linear like that. It will be a big factor because at the end of the day, it has to be cost effective for the miner. There's no point in spending $100,000 of resources to mine one Bitcoin, which gets you 60,000. It's not a good business model if you do it that way. But the idea is, even when we've said, okay, you used to get 50 Bitcoin and now you're only getting 3 Bitcoin or 3.125. Yes, but Bitcoin used to be worth $1. It's now worth, I mean, the other day it was worth $70,000. We're just recording this podcast where it's gone down a little bit in the past week. So the idea is that this currency is constantly appreciating in value going forwards in real world terms, comparing it to other currencies such as dollars and pounds, which are constantly depreciating week on week, which again, people have noticed when it comes to buying, selling, your shopping, is constantly depreciating, whereas this is constantly appreciating.
Okay, cool. And the use case that you described there, where you said, like, if I needed to pay you £10 digitally, basically, I love that explanation. But what you're saying there is that you think of Bitcoin as a currency. And my counters to you are getting weaker by every passing hour that the price goes up. And my counter to you there is that I have never been into a shop and they said, do you want to pay for that in Bitcoin, Tommy? I don't know. Like, no one's ever asked me to, pay them in Bitcoin. So it's a currency, but no one's using it and you can't really spend it.
Yes, so I think it's a fair argument, and you would be struggling to pay for things in Bitcoin, less and less so in the sense that you can pay for Bitcoin things via PayPal. PayPal have taken on board Bitcoin transactions, for example. There are certain properties in London that very happily take your Bitcoin rather than cash, for example. But I think where you have to see is, where are we on this trajectory, and really where we were 4 years ago, and I consider 4 years ago being late to the party. Now you're very late to the party, in the sense that in the next 4 years, 8 years, 12 years, it's not going to be used as a currency maybe for a few decades, but certainly it's a very good store of value. So right now, if I'm sat on £100,000 in my bank account, for example, if I leave £100,000 in my bank account, it's just constantly depreciating in value. I then have to go find an asset, a stock, a share, something to put my money in, which I hope will appreciate, and not just appreciate, it has to beat the rate of inflation, which is quite high at the moment as well. It's hard to buy a property with all the kind of added fees that come with property, stamp duty, lawyers, blah, 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 blah. And if I bought my property with my £100,000 deposit, if I needed that £100,000 back straight away, it's not easy to get the money out. If I bought £100,000 worth of gold, where am I storing this gold? How am I keeping it in my home? I have to trust a bank again to look after my gold and look after my assets. And again, I can't really transact with that without going through massive fees and paperwork, etc., etc. So the idea of Bitcoin, I'd say in its current format, is a very good storage of value. And that's the way I'd look at it for today. I think the idea of transactions for the future is certainly used at large transactions, and I've certainly done very large transactions using Bitcoin as well, and it was very smooth, it was very easy, and I think it's becoming less convoluted to navigate now.
The Lambo dealership takes Bitcoin, I assume, yeah?
Honestly, if I showed you this website, they used to take something like 3 Bitcoin for a Lamborghini back in the day, which seemed like a steal, but the truth is, anytime somebody sells their Bitcoin, they always regret it. And I include myself. I've sold tens and tens of Bitcoins because I wanted to buy a property or I wanted to do something with it, and it always seemed like a good idea at the time. And when you look in retrospect, you're like, I could have just bought 2 of those without, if I hadn't sold it then. And you always have that kind of fallacy. But at the end of the day, I don't think we should live to hoard money. I think you should spend it when you need to spend it. But if it's sat there doing nothing, I would store it or store some of it in Bitcoin.
Yeah, it's not about being the richest person in the graveyard. I definitely agree with that. But just back to this store of value thing. A store of value needs to be stable, reliable. Let's just say boring, right? Bitcoin is not stable. We went through the price fluctuations just in this short 4-year period. It's incredibly volatile versus something like gold. Now, I don't own any gold, but gold is boring and it's very stable and it's been around for, centuries of it been trading. So is Bitcoin that good as a store of value?
I think it's very stable, is what I would argue. I think if you're looking at kind of day-to-day transactions, if you were transacting with Bitcoin day-to-day, yes, it would come across as quite unstable, in the sense that you'd wake up and the next day you're down by a few thousand, if you will. But I think if you draw between 2 points, and it depends where you're taking your 2 points in time, you'll find that it's quite stable and it's constantly appreciating in value. I think the idea of if you want to store assets in something else, by all means, you should do that as well. But all of your assets, and again, not financial advice, but how I do business myself, is you've got to have low risk, medium risk, high risk. You've got to have short term, mid term, long term rewards. And I think certainly Bitcoin would fall into that category of, sure, if you want to call it a long term prospect, which is high risk if you are planning to transact it there and then. If you've got no pressure to do that and you're not depending on that money, I think, through our prices that we've gone through, it's demonstrated that it would have gone up easily. And there's no asset you can tell me that you would have had that's gone up 4 or 5-fold in 4 years since we've been speaking.
On the public markets, yeah. Private markets, definitely. But that's, we've got to compare apples with apples. So publicly traded assets, shall we say. Okay. We always talk about the latest. There's always a scandal with Bitcoin. We've talked about Mt. Gox when that place got cleaned out. The latest scandal that we should probably talk about is, and we're going to put allegedly, although it's not allegedly now because he's been convicted. So let's talk about FTX and SBF.
Yeah, I mean, SBF Bank-Friedman, I forgot how you say his name.
Sam?
So this Sam Bank-Friedman, yeah. So this guy essentially was the messiah when it came to kind of cryptocurrency. He had 2 arms. So he had one arm which was a storage, if you will, and he would take your funds and he would go and invest those storage or look after them, and then you would get rewards for keeping your money safe with him. If you will, think of it the equivalent of having interest in the bank. Leave your money with me, I'll pay you interest on leaving your Bitcoin with me. And then the other arm was one where he was actually actively trading on the market and taking risks. And where it got very dodgy with him, as well as all the kind of dodgy things he was doing, was that he was actually using people's funds and taking massive risks and trading with them, essentially lost all their money. And then people would come back and say, okay, so I'd like to now withdraw my Bitcoin that I left with you as it's been accumulating. And he said, yeah, I don't have it anymore. And the maths just didn't add up. So he's gone to prison, I think it was 20 or 30 years they've put him away for. They stripped him of a lot of assets. He probably enjoyed a lot of that money and had put a lot of that money elsewhere, because there are so many assets worldwide where he had planes and houses and cars and everything else. And unfortunately, man is man, and man will be greedy and think they can get away with it.
But crypto in general does seem to attract a disproportionate amount. I mean, all financial situations have had their scams and their con artists, but crypto's definitely had its fair share, would you not say? Like, why?
No, I would argue it doesn't. I would say, and this is where you start getting to conspiracy theory territory. There is a narrative to always paint a bad picture of Bitcoin. Governments and media that are supported and controlled and have the whispering in their ears from governments don't want Bitcoin to become a big thing, or want to at least slow down its progression to becoming a big thing, so that they can at least get involved and control it as best as they can. And again, I think in terms of the narrative was Bitcoin is used for drug money, Bitcoin is used on the black market. Is like the biggest currency that's used for anything dodgy is the US dollar. You look at the transactions of cocaine worldwide and all the drug money and all prostitution rings and anything else that's illegal, weapons, sales, arms. There's not people sat there on computers buying and selling in Bitcoin, but they'll make a very big deal of it if they can. And same thing with this kind of fraud that's taken place. There's huge fraud being taken place by our very governments at the moment in their billions and trillions. You don't have to look that far back at COVID, how much money was printed in COVID, and they said, oh, sorry, we lost all the money. What do you mean you lost the money? Oh, we lent it to all these people who didn't pay us back, and we gave it to all our friends who have taken it, and we spent it on all these shady companies that just set up overnight, but you're going to have to pay for it via your taxes now because we lost all that money. So again, you're never going to get that spin in the media, because it doesn't serve anyone's purpose to lose faith in the government. It's much easier to bash Bitcoin because Bitcoin is not a bank. It's not an entity that can fight back or sue somebody back. It's a network between people. So it's just easy pickings. And to be honest with you, it's fine. Like I read the articles, I chuckle. It never ever phases me. And the people that have invested in Bitcoin or plan to invest in Bitcoin don't care about these articles. It doesn't make a jot of difference to them. Somebody saying some drug lord uses Bitcoin. Okay, good for him. I hope he gets some tax benefits from doing that.
And I think what you just said there is a really important point, in that if someone says, what's the best investment portfolio for you or me? The answer is the one that you can stick with long term. right? And what you've just said is that you just ignore all the noise and chuckle and ignore it. And it's the same for me when there's a stock market crash, as there was in COVID. Statistically, I knew that it would come back. I didn't do anything. There's always people trying to sell newspapers with sensationalist headlines about stocks crashing. This is broken. Everything's going to zero. I just ignore it, carry on. And that's because I understand how the stock market works. I understand how the value of stocks is calculated. And historically speaking, there's about 150, 200 years of data showing that in general, the global stock market index just goes up over the long term. Not advised to do any research. But my point is, I'm 100% committed. I'm 100%, in. Nothing is going to make me sell my stocks and shares. But with Bitcoin, I've just got too many unanswered questions or things that I don't understand in my mind.
Have you still not bought any?
No.
Like genuinely, not even £500 worth.
Do you know what? After our last one, where was it, at 19,000? I thought, I really should buy some now. And then I got distracted by other stuff, other business interests, and
I mean, Tommy, we're talking about price changes in 4 years. We've been talking. Just consider this your retirement money. Consider where this is going to be in 30 years' time. When I've explained to you about the halving, I've explained to you about it's a finite resource. There's only going to be 21 million of them. Just have £500 worth of Bitcoin and forget about it. Don't look at it again until 2030.
The thing is, you need diamond hands, and I don't think I've got diamond hands for stocks and shares.
You spend that on your cycling gear.
I'm going. I mean, I have thought about it, but honestly, like for 500 as well, you could argue that is such a negligible amount of the portfolio, and it would stress me out because I hate losing money. And yeah, it's only £500, but it would stress me because I know that next time Bitcoin crashes, which statistically is quite likely, I know that I would sell and not have diamond hands. And if you buy high and sell low, that is just a classic way to burn a ton of money. So it's not really about the £500. It's more about the psychology of investing. Like, I've just got too many unanswered questions about it. And I think the best portfolio is the one you can stick with long term. And also, right, if you don't need to take these risks to hit your financial goals, why would I? Like, if I can hit my goals and have enough for whatever enough is, and that's an individual number for everybody, why would I need to take these risks?
I think that's golden advice, to be honest with you. I think that really, I think we can all agree on that, in the sense that everybody will have their own life objectives for them, their family. Some people's life objectives are they just want to own one house and have it mortgage free. Some will be, I need to own 3 properties because I have 3 children, and when I die, I want each one to inherit one. Somebody like me, I'd like to have a private jet. So that's my objective, and that's what I'm trying to work towards. It depends on what you want to do. I think from my kind of cryptocurrency wallet, if it went to zero tomorrow, I'd be a bit annoyed, but ultimately I'm not depending on that. My day-to-day, my daughter, my wife, my family members, we're not depending on that. And I agree with you. You shouldn't ever put yourself in a position where it's the be-all and end-all and you have to track this thing daily. It shouldn't be like that. It's just a long-term investment. Forget about it. Put it away. Have faith in the process. If you don't understand the process, you don't have faith in the process. I can appreciate that. I think there's enough material out there online to educate yourself. Certainly not a random doctor in Leeds trying to convince you. But there's so many educated people that can tell you about this subject and reassure you.
Yeah, no, I think like I said, you got to be able to stick with it. I know that if Bitcoin went to zero tomorrow, you would buy more. I know that if Bitcoin went to zero tomorrow and I had some, I'd sell it. I know that if stock market drops 30, 40%, as historically it can do, I would buy more. So if you don't believe in it and you can't hold that investment forever, you're just going to end up buying high, selling low, classic way to destroy wealth. And if you don't take the risk, like I'm taking plenty of risk outside of Bitcoin. Don't worry about that.
Yeah.
But the core of my portfolio, I like it to be boring. Like I never check it. I just keep pound cost averaging into it every month, and you can project it.
But see, like you said, you like it to be boring. I find Bitcoin boring.
Not volatile enough.
No, honestly, like sometimes things move in the 6 digits, and I just look at it and go, okay. And it'll be fine, because it's always been fine, and it always comes back, and it's just a matter of time of where you get to in that time frame, and it will come back, and things will be fine again.
You got diamond hands. I respect that. I do not have diamond hands. If I buy some Bitcoin, I will let you know. Definitely.
We'll celebrate. We'll get you a certificate.
Like your 25-meter swimming badge. Yeah, I mean, like if it came in an ETF and I could hold it in a stocks and shares ISA, no, I still wouldn't do it because I know that I just don't believe it. So yeah, if you don't, you got to believe in your investment portfolio, and you've got to understand it.
Let me ask you this question then: what would it take? How many years need to pass? What value does it need to be at until you think, okay, now I believe in it?
It's not about value, right? It's about I don't own any non-productive assets. And by a non-productive asset, I know you know what this means, but I'm just helping everyone out. If a company produces goods or services, that is a productive asset. You can buy shares of that company and you can watch it go up or down. Gold is not a productive asset. It doesn't really do anything. Bitcoin, it's not a productive asset. It doesn't do anything. And in fact, you could argue that gold and Bitcoin rely on what you call the greater fool theory in order to increase the price. Because basically, if you want to sell your Bitcoin right now, you've got to find someone who, the greater fool theory, believes in it more than you. That's not me, but it might be someone. So I just don't like non-productive assets. I don't understand them. So I am consistent. I don't hold any gold either because it's non-productive asset.
Would you consider properties non-productive assets?
No, it's producing a return and it's got a clear function.
If you lived in it?
Oh, my own home?
Yeah.
No, not an asset. Mate, it's a massive cost center. Like, okay, we should split that out. Yeah, my own home.
Yeah.
I think this is a big mistake. Lots of people. Property right now in the UK is the same price as it was in 2004, adjusted for inflation. And that links back to what you're saying. Like, people are underestimating inflation. But the number one way to beat inflation in the long term is stocks. Not advice. Could be Bitcoin. Not enough data. So yeah, I don't consider my own home an asset. It costs me money. You could probably hear banging in the background as someone's doing some maintenance on it. I'm literally spending money on it right now. So no. But rental properties or commercial,
you're investing in it.
It's a money pit, mate. I'm just taking 20s and lighting them on fire. I guess I could be lighting Bitcoin. I tried to buy the builders in Bitcoin, but they weren't up for it, unsurprisingly.
No, fair enough.
But yeah, I don't know. What do you think? Criticize my strategy. I mean,
no, I think it's better than doing nothing. And I think there's lots of people that are at risk of doing nothing with their money and sat there. Plus, I think a lot of problems, people don't know when to enter the whole kind of investment sphere. People think you need to have a huge amount of money in the bank account. You need to have tens of thousands of pounds sat there doing nothing. Okay, and now I'm going to go ahead and do something. And I don't think you should think in that sense. I think you should think in percentage sense. So whatever your paycheck is, whatever all your expenses are, whatever you've got at the end of the month, whatever you plan to save, just slice a bit of that, of what you're saving, and go and invest it, and take that slice each month. That's what you're investing in. So you don't need to have thousands. You could have tens, hundreds, and just start building up slowly, because the time is going to pass whether you do it or not. And you're always going to look back and think, if only I'd done a little bit there, I could have built something by now. And I think, again, on everybody's own financial metric, it really depends on what kind of value you're happy to put away, which is not going to impact your quality of life. So, putting £1,000 away for somebody is nothing. They wouldn't notice it. But putting £1,000 away for somebody else, that's huge. That's half their mortgage, or 2/3 of their mortgage, or whatever it may be. So you figure out what is a safe number for you, be that £50 a month, £100 a month. And I think you should get involved in investing, if you want to go in stocks and shares, or FTSE 100, or whatever else you want to do, then by all means, I think just start and see how you get on.
Like, we're dishing out sound investment wisdom here in between ridiculous stances on Bitcoin, because you're absolutely right. When I first started investing, the investment minimum on my stocks and shares platform was £200. And I didn't really have enough. So I think I invested like 4 times in the first year because I only had 800 quid. But you just got to get started, because over the long term, that allows compounding interest. And yeah, putting 800 quid away when I was at F2, it seemed pointless, and it was a tremendous amount of money. But now, over the last 14, 15 years, that's just compounded away. So yeah, start early. Good call. Definitely get a percentage of your income automatically invested every month. And if it's automatic, like, you never forget to brush your teeth, because it's a habit. You do it every morning and every evening, for all the dentists listening. And if you can get your investments set up in the same way, automatic, and it just becomes automatic, and you just, after a while, you don't notice it, whether it's 50 quid and that's 10% of your income, or whether 2,000 quid is 10% of your income. It doesn't matter. So start early. I think we're giving out sage investment advice in between craziness.
I'll drop you a bomb, and I'll say I think it's better doing that than getting involved in a pension.
Hard disagree.
Yeah, I knew you would.
Come on, let's hear it. This. You've said some crazy stuff today, but this is the most crazy. I'm interested.
I just think pensions in general are just the biggest con ever. This idea that we are propping up the generation before us and we are paying thousands and thousands of pounds a year, and you're incentivized because of all the tax benefits, and don't worry, you'll get, the NHS pension is one of the best in the world, and it's ironclad and all this kind of nonsense. It really depends on you getting all the way to the end. And by the way, that finishing line keeps changing. They keep changing the goalposts of what the finishing line is. They keep adding in caveats. So for me as a locum doctor, if I die not in service, so I didn't have a shift that day, they're like, oh, sorry, you weren't covered for that. So you have to get all the way to the end. And even when you do get all the way to the end, then they'll tell you, right, so do you want us to drip feed you what you put in? Or do you want us to kind of work out a calculation with you of what you can take back? Whereas the investment portfolio you're talking about, or I'm talking about, is something you have access to all the time. You can pull out whenever you want to pull out. You're not at the mercy of your employer, which is, look, you're not at retirement age yet. You're going to mess this up. You've been working for 30 years and you just had to get to 40 years, and then you could have got this cash cow. And for me, the retirement age that keeps changing. What do I want with the money when I'm 67? What am I going to do with it when I'm 67? I would like to think by the time I'm 67, I've already paid off all my debts through working or traditional means anyway. So what do I want that money with that you're going to drip feed me to go on, P&O Stenoliner or whatever it is, go on a cruise? I think you're better off having the money in your own pocket. You're controlling it. There are other tax efficient ways of doing it. That's to say, I do have an NHS pension. I should caveat that before I go off on a tangent. But that's because I'm still making up my mind of, will I make it big enough that I don't need this nonsense at all, which is going to be a tiny bit of my portfolio and not actually help me out in the long run. But I think, they're a con in general.
I don't even know where to start, but I'm going to counter it by just repeating what you said earlier, which is what we agreed on, that you need a low risk investment, medium risk investments, and some high risk investments. Now, clearly mine and yours definition of high risk is different, but the NHS pension is the ultimate low risk investment. It's guaranteed inflation proofed income for life. As long as you live in retirement, you get that pension. So that is a great platform to build on top of. But if you don't have that, not advice, do your own research. Interesting that you said you do have one as well. So it's kind of like me saying don't buy Bitcoin, but also buying Bitcoin. If you don't have that, you're building everything on sand. And the tax benefits are massive, especially, if you're a high earner. Like the more you earn, the more tax you pay, the more pensions tax relief you get. So the NHS pension and pensions in general do have their problems, and retirement age is one of the main reasons why I maintain.
You don't think that's a con? In the sense that you've earned too much money, so you're going to be hit with massive taxes. I'll tell you what, you give me your excess wealth, which you could have spent and enjoyed if I wasn't taxing you so hard on it, and I'll hold it here for you for the next 30 years. And don't worry, it'll be here waiting for you when you get there, if you get there.
I'm getting there. Don't worry. But it's just, it's just the bottom wrong. But to your point about the retirement age going away, I think that is a massive factor that loads of doctors are sleepwalking straight into, because for me, it's actually out to 68 right now. But you can counter that. You can take it early. And yes, there are actuarial reductions for that, but you can get the money early if you want it. And if you don't want to do that and you want to maintain the value of it, then you can fill in that gap between your desired retirement age and your actual retirement age with a whole manner of other tax efficient investments, which ain't Bitcoin for me. So, wow, we should do another episode on this, but we're going to agree to disagree there. I just think, and you did say you have got an NHS pension yourself, so you're hedged. And so for me, one thing that I think about on a long-term basis is don't get all your eggs in one basket. I've got a bit in the NHS pension, got a bit in a private pension, got some in the stocks and shares ISA, got some in a lifetime ISA, got some in other business interests, got some in property, right? So unless all of that goes to zero, I'm going to be all right. But I just think you cannot overstate the value of a guaranteed index-linked income for life. It's guaranteed.
And
you have to wait. It's backed by the government.
And that literally sends shivers down my spine. These guys are the biggest crooks. You've literally seen what they're like. You've seen what they're getting away with these days. You think by the time you and me are 67, 68, the rug's not been pulled out from under our feet. This is not the same world we're living in. And just to go back to the point of why I maintain the NHS pension, just to caveat that, is because I'm a locum. So when I'm a locum, I agree a hourly rate and then a pension contribution on top. So that pension contribution for me is free money in the sense that they're giving it to me anyway because I'm contributing towards my pension. So I don't mind taking a little bit of what I'm earning as well and putting it away with that. But if I was banking on that, which I think a lot of people bank on, they put so much emphasis on their pension and don't look at what else to do with their money at the time. I don't think that's a wise strategy, personally.
Though, obviously you could negotiate a rate outside of the pension, so you don't have to do that. Nothing stopping you from doing that. If you're a locum, you're agreeing a one-to-one contract with another business, so you could get out of it that way if you wanted. But yeah, I just think it's like the bottom foundation of everything. If the government defaults on the NHS pension, we've got bigger problems than that.
They're gonna default on the NHS. They're gonna default on the NHS, Tommy. Come on, the NHS is not going to exist by the time we're 67, 68.
Even more reason, and this is a serious comment, to stack your NHS pension right now, because I think what you just said there, unfortunately, could be true. And that's why I'm stacking mine right now, because I want to get it in while it still exists, because I know that I will never get anything close to that as a private pension. Would it be more flexible? Yes, arguably. But would it be the monetary value as good as an NHS pension? Not on any calculation that I've ever seen. But yeah, if you believe that the NHS is unfortunately going to be defaulted on, as you said, even more reason to stack it now. It's like buying Bitcoin in 2008. You might as well stack it now and then wait.
Yeah, I can't argue against the idea of hedging your bets and spreading them as well. And if you're automatically doing that, then you should do that. And I won't be a hypocrite, and I admit that I've also got an NHS pension, but I would say as soon as I can get out of the rat race, and that's how I see the NHS pension. The NHS pension is based on me working in the NHS, which is a shackle which I want to get out of. Then the sooner I can get out of that rat race, the better.
And that is probably why it's a Tuesday morning. We're both sat here recording a podcast. You're about to go drive your Lamborghini. If you're watching on YouTube wondering why am I dressed in this stuff, it's because I'm not going to drive my Lamborghini, regrettably, but I'm going out on a bike ride. So I agree with that. I've done 10 sessions or more in the NHS, and it's very, very hard. And full respect and thanks to anyone that's doing it. But yeah, you got to think about other solutions. And I think we've given people some ideas on other solutions. Like I said, you're off to drive your Lambo on the way to your private jet.
Why are you starting this rumor? I don't have a Lamborghini.
Wait, you got the jet?
The jet's fueled and ready to go.
All right, I'm going on a bike ride, so make of that what you will. But yeah, this was a super interesting discussion. Of course, not advice. We always have to caveat that. Just a chat amongst two friends. And if you're watching on YouTube, let us know what you think about in a year's time. So this time last year, 2022, the Bitcoin price was 19,000, you said. Today it's $62,000. Let us know in a year's time what you think the Bitcoin price will be, and let's see. Are you going to make any predictions? You don't have to make predictions of numbers. You just kind of...
No, it's just when I need it, the day will come when I need it, and it will be there waiting for me, looking after me like the baby it's been this whole time.
Awesome. You got anything that you need to promote, or what's your promotion today?
I don't think you want it on your podcast, to be honest with you, but really just about, I think we all have to do our bit for ourselves and look after our family and look after our greater family, which is our humanity. And if people have been seeing the news about Palestine, that's massively affected me right now, and it affected a lot of people in our society. And I think we should just really strive for peace, strive to support these people that are starving and being bombed really to oblivion. And I'm sure you didn't want that on your podcast at the end, but that's the only thing. If I have this platform to give this message, is really just pray for the people of Palestine.
I don't think any podcast listener would disagree with, we do not want war and we don't want innocent people being harmed. So mate, that was awesome. I'll leave you to fly off. I'm heading off on my bike. Great to catch up. Cheers, mate.
Bye, Tony.